Okay, good evening, everyone, and welcome to the Anderson Report. This is Wednesday, September 16th, and we're very happy to have you all with us tonight on a day when the Snowflake IPO traded 100% higher than its IPO price. Despite that, we saw markets back off a little bit from their highs between 2:30 and 3 o'clock. And really end the day with what we would say would be mixed results for the major market averages. Again, this is the Anderson Report. I am Tim the Source Anderson. This is my YouTube channel. And this is also being broadcast on Periscope at TJ Anderson 12. My Twitter handle is TJ Anderson 1. If you are new to this broadcast, you can subscribe by hitting this red subscribe bar on YouTube. You can also hit the bell right next to the red subscribe bar, and you will get notifications of when the next broadcast would be. John, it's great to have you with us tonight, and also to everyone at Network One. Okay, so let's take a look at what the highlights were today. Really a similar theme to what we've seen over the last 2 weeks, with NASDAQ underperforming after months of overperformance, and really the S&P 500 and NASDAQ and the Dow Jones Industrial Average hitting some what might turn out to be very stubborn near-term resistance levels intraday, and at their highs of the day between 2 and 3 o'clock, backing off with some profit taking in the last 90 minutes of the day. Frankly, the S&P 500 and the NASDAQ were almost just mirror images of what we saw yesterday, where yesterday the S&P 500 gained 0.5%, the NASDAQ gained 1.2%. We had almost those moves to the downside today. The S&P 500 lost 0.5%. The NASDAQ lost 1.3%. The Dow, which had basically a very flat move yesterday, was up 0.1% today. A very flat move, but it did close above the 28,000 marker at 28,033. The S&P 500 closed at 3385.50, and NASDAQ just above the 11,000 marker at 11,050. The standout performer today was the Russell 2000. It is having a very nice week after underperforming for the week or two before that. The Russell was plus 0.9%. It went out at 1552. And really with very, I would say, mixed performance, with the Dow closing a little bit higher, the Russell closing higher by almost a point, the S&P and NASDAQ reversing the gains that it had on Monday. I think a lot of people might be a little disappointed in the action. I mean, the Dow was up well over 300 points, maybe at around 2:15, 2:30 in the afternoon. The S&P 500 was up by well over 1%. It gave all that up and lost 0.5%. But even with the sell-off late in the day, the advanced declines were still moderately positive. At the NYSE, there were 3 gainers for every 2 stocks that declined. and the NASDAQ had very similar breadth stats, with three stocks advancing for every two that declined. And in terms of sector performance, something we have not seen in a long, long time. Energy was the best performing uh, main sector among the 11 S&P uh, major sectors, gaining 4%. We have not seen that type of relative strength from energy, uh, I would say, since well before even the coronavirus sell-off started in very late February, early March. Uh, that 4% gain by the energy sector of the S&P pretty much followed a 5% gain for the commodity, as West Texas Intermediate rallied over $1.90 to close just above $40 a barrel. That $40 level is a threshold that we had been looking at uh, quite a bit throughout the month of August, when oil had gone through 40 to the upside and held it. Then, when we began this sharp sell off after September 2nd, oil slid first to 38.50, then down to the 36 and a half, $37 level. Part of that decline in oil was precipitated by the Saudis saying that they were going to lower prices on crude to shipments in the Far East, specifically Japan and the South Pacific. That kept oil um, well below $40 for most of the last 2 weeks. Finally, with a move above it today, um, energy sector up 4%, highlighted maybe by Chevron, a key Dow Jones member, the benchmark name in the Dow Jones Industrial in the Dow Jones Industrials now that ExxonMobil has been removed. Chevron was plus 3% today. Other big movers in the among the S&P sectors, mainly to the downside: information technology down 1.6%, communication services down 1.2%. Those are the big mega cap, mega growth stocks in the technology sector, but also in the consumer discretionary sector, down 1%. To the plus side, financials regaining a little bit after their big sell off yesterday. Financials plus 1%, industrials plus 1%. But clearly, the headline among sector performance was energy plus 4%. There were inventory numbers today. There was a very large inventory drawdown of close to 5 million barrels. But look, we have seen significant drawdowns in oil inventories before, on days when energy did not gain anywhere near 4%. I think it might be partially also contributed to the fact that oil was just, given that the economy is improving so much this quarter, uh, oil in the high mid 30s to high 30s um, is just too cheap, and it closed today above $40. Um, Couple other highlights among the mega growth technology names: Apple down 3%, Facebook down 3%. Facebook, I think the big contributor or the catalyst for that move to the downside was a story very early in the day, pretty much overnight, by the Wall Street Journal, that the Federal Trade Commission is potentially looking at an antitrust case against Facebook. The stock really had no chance right out of the chute after those headlines. Down 3% on the day. Also, Adobe Systems, a big gainer over the last few months, down 4.5%. It did report earnings Tuesday night. Pretty much, I think, a sell on the news event. They didn't raise their guidance significantly for the year or for next year. They pretty much kept their forward guidance where it was, despite they had a very strong earnings report and revenue report for Q2. So Adobe, a little bit of a sell on the news. So let's just to take a look at the market averages on where they stand for the year. Okay, the Dow is down 1.8% year to date, closing again just above 28,000 at 20,033. The S&P 500 is plus 4.8% year to date. The NASDAQ composite, despite the fact that it's down 6% on the month of September, is still plus 23% year to date. And the Russell 2000, clearly the laggard. We spoke about it many times uh, during leading up to the Labor Day weekend. And again, I really appreciate everyone's support. I have been off the air a lot over the last 8 to 10 days, a few family things going on out in Michigan. If you notice, the background's a little bit different. I am broadcasting from um, uh, Michigan the remainder of this week. The Russell 2000 down 7% year to date. Um, Again, up 1% today, but still down 7% year to date. We will have to see if the Russell can maintain the strength that it's had the next couple of days after, uh, trying to make up some of that underperformance. So we mentioned the strength of the economy and that probably helping oil to rebound above 40%. Sometimes things just settle in with people like, look, I know we've had a sell off. I know that the markets are, a little bit weak. I know there's still a lot of uncertainty over the uh, coronavirus and exactly when a vaccine might be available. But the economic numbers overall have shown a very a sharp recovery in the third quarter. Clearly, the stock market has had a V-shaped recovery. The economy is trying to duplicate that lift of the V back up to where to mirror the V-shaped move in the stock market. Good evening, Rick. Thank you for joining us. And Leslie, I think it's probably Leslie. Thank you for joining us. Yes, I have been off a lot over the last week and a half. So, uh, we did have some economic news today, and we also had the uh, Fed interest rate decision. And everybody knew they weren't going to raise rates. So it wasn't really a decision as much as a policy statement that they put out at 2 o'clock, and followed by the Q&A presser by Chairman Powell at 2:30. So um, a lot of questions on whether or not the sell-off was in reaction to the Fed presser. I did not see it live. I did go back and watch a lot of it after the fact. I watched and read the statement. I saw what I thought were key moments from the Q&A. I did not see anything in there that I thought would have um, been a legitimate reason for investors to be concerned. Um, but I think there's two things to keep in mind is that uh, Chairman Powell is not necessarily the best presenter or the best messenger on occasion that the Fed has seen over the last few decades. Um, there have been times, and it's true for every incoming Fed chairman, and I know he's been in that position now for, oh, what is it, close to a couple of years, year and a half, obviously dealing with the coronavirus economic shutdown implications is a heavy lift for any Fed chairman and or policymaker. Um, he's just not necessarily the best marketer of his message all the time. I thought that I thought that some things he said maybe could have been a little more clear. There is no doubt that he is going to let inflation run hot, well above 2% before they even consider raising rates. A lot of people interpreted this as meaning through 2023. It's very possible that some investors could have thought, wow, he's really bearish on the economy if there's no way they're even going to talk about raising rates for at least 2 years. He must have big concerns about economic growth. I just think it's that they've taken a slightly different tact. And that is that, and he was very clear about this in his Jackson Hole speech, that they are going to let the economy run hot, so to speak. And they are going to let inflation run above their 2% threshold before they consider raising rates because they don't want to have inflation go above 2%, have it be there for, a quarter, close to 2 quarters, raise rates, and then have the economy um, sell off because people think they're raising a little bit too fast. They are specifically the Fed said, or Powell said, it will keep, it will allow inflation to stay above 2% for some time before raising rates. He said that there's more stimulus needed. That's a whole nother issue. And that the coronavirus continues to be the central issue to full economic recovery. Neil, it's great to have you with us tonight. Thank you for joining. Now, what does it mean when he says we will keep inflation above 2% for some time? I think that and again, Chairman Powell is not a Fed speak type of a guy, certainly in the vernacular of uh, uh, Greenspan, Bernanke, Yellen, even all the way back to Paul Volcker. He's not an academically trained PhD economist. He comes from the private sector. He is still very much connected uh, to and stays in touch with key players, particularly in the industrial world. So I think that for some time for the Fed means at, at least 3 quarters, maybe even at least a year, unless inflation were to spike very sharply above 2%. Again, he said they will they will allow inflation to stay above 2% for some time. For some time is not 1 or 2 quarters in Fed speak. Okay. For some time is a year, maybe a year, maybe more than that. Okay. So what that means is uh, he is not going to take away the punch bowl as rapidly as other Fed chairmen have in the past, just when the party starts to get going good. So, look, When we get to that point, if inflation is spiking faster than anticipated, if it gets up to 2.5%, 2.75%, 3%, always possible that he may uh, act a little bit sooner than anticipated. But I think that would probably only be a good thing. That would only mean that, look, the economy is smoking. Maybe we can raise rates a quarter of a point, a half a point. Even if we got to that point and they did raise rates a half a point, that means rates would be at 0.5% rather than zero. So I do think it's still a bullish statement. Um, I think that they will stick to that unless the economy is just really smoking, and they have every indication that it's going to continue. Uh, so, what other economic data do we have today? Before the Fed spoke, we did have retail sales this morning at 8:30. They were a little bit weaker than um, anticipated. Um, Total sales plus 0.6%. Expectations were 1.1%. X autos plus 0.7. Expectations were 0.9. But so a little bit lighter than expected. But let's put this in perspective. That's still a pretty good number. In fact, it was a strong enough number from retail sales for the Atlanta Fed now GDP now forecasting group, which is not an official prediction by the Atlanta Fed. Don't get me wrong. Uh, but the Atlanta Fed does have this subgroup called the um, GDP now um, forecasting um, project where they look at GDP and all the things that go into it, and they give you a projection of what they think the quarter's GDP number will be when it's reported about a month after the quarter ends. And they have, I would say, a very solid reputation, not of hitting it right to the 10th of a percent, not of always being right on, but of definitely being almost always in the ballpark. Coming into today, their forecast for Q. And also, at the very beginning of the quarter, you have to take their projections with a grain of salt because they're dealing with limited data. Once you get much later in the quarter, and even after the quarter's over, they'll continue to update for a couple of weeks because we'll still have data come in October that was data for September, and September clearly is the third month of Q3. So the Atlanta Fed coming into today was looking at GDP growth for Q3 at 30.8%. 30.8%. This is after the 32% decline we had in Q2. Okay. They raised that today after the retail sales report to 31.7%. So they bumped their estimate for Q3 GDP by almost a full point to plus 31.7% for Q3. Okay. Believe me, the Trump economic team would do cartwheels, okay, if Q3 GDP came in at plus 31.7%, especially given that initial or advanced report for Q3 GDP will be reported during the last week of October, about a week before the November 3rd election. Okay. So, Atlanta Fed bumping their Q3 GDP model for Q3 to plus 31.7% from plus 30.8%, basically due, and they specifically cited an increase in real personal consumption and an increase in gross private domestic investment. That's we also had a NAHB housing market index hit an all-time high today at 78 for the month of August. We have mentioned the housing sector numerous times. It's very strong, really based on three factors: a significant undersupply of new single family homes, extremely low 30-year mortgage rates below 3%, and a huge interest by people to move, specifically people with young families, to move out of big urban cities to the suburbs or possibly even beyond. So, positive economic data today, um, a statement. And the other thing about I'm going to go back to the Fed just for a minute. The Fed statement comes out at 2 o'clock. The presser starts at 2:30. It usually goes till about 3 o'clock. Then the market's open for another hour. If anybody has any reason to be cautious at all about what the Fed said, it's it's very common for the market to be weak, maybe during that last hour or last 90 minutes of the day. Then when people have a few hours overnight from when the market closes on Thursday to when the market closes on Wednesday today to when the market opens the next day, to look back over it again. Take a look at exactly what the Fed said. Um, take a look at what the Fed didn't say. Okay. And then reevaluate. And sometimes the first full day of trading, sometimes the first full day of trading after the Fed statement can be a reversal of what happened during the 60 to 90 minutes after their statement and press conference the day before. I'm not saying that's going to happen tomorrow. I think that stocks had a pretty strong 2 days coming into today. It had that stocks were at one point very high, and we had mentioned the significant resistance levels that might be difficult for a couple of the major market averages to get through, specifically the S&P 500. We mentioned the 3425 level. It was through that on an intraday basis today. We mentioned the 11,300 level on NASDAQ. It maybe got within 50 points of that and then turned down during the last 90 minutes of the day. We'll see what happens tomorrow. Clearly, tomorrow's a Thursday. So what do we get on every Thursday? We get the initial jobless claims report, the weekly initial jobless claims report, and continuing claims. Last week, that has been decreasing, which is positive, but decreasing on a little bit, not every single week. Last week, they were pretty much from the prior week, although staying below the plus 900,000 number. We'll see if maybe we get a dip tomorrow, although I think the forecast is for pretty much unchanged from the prior week. So, just a couple of other mentions. We mentioned the Dow Jones transports yesterday, and it really caught our eye that since September 2nd, when the S&P and the NASDAQ posted all-time highs, and those first 2 days of September were a little bit parabolic on the way up. They were the end they were kind of added on to a very sharp rally in August after a very sharp rally in July, and then things got almost a little bit cuckoo on the way up, September 1st and 2nd. And then we had the big 3-day decline, and we've been treading water since then, maybe trying to find some new leadership in the market since the big mega cap, mega growth tech names were looking like and feeling like they were a little bit exhausted from just too sharp of a rally. And that leadership might be showing up in the transports, and we saw a little bit of that today too. Now, remember, the Dow Jones Transportation Average closed on Tuesday higher than it closed on September 2nd. So from September 2nd to yesterday, September 15th, the Dow had declined 3.8%, the S&P 500 had declined 5%, NASDAQ had declined 7.2%. The Dow Jones Transportation Average was positive over that 2-week period. It declined initially, and it regained that pretty rapidly. Now, FedEx reported earnings uh, Tuesday after the close. They were phenomenal earnings, their best quarterly profit in history for Federal Express. The stock was up 6% today. The Dow Jones Transportation Average gained 0.7%. It's up, it's 1% higher than it was September 2nd, which were the day that the S&P 500 and the NASDAQ posted all-time highs and the Dow had closed above 29,000. The Dow right now is just above 28,000. It's 4% lower. Okay. Now, watch the transportation average going forward. That's the airlines, the railroad stocks, and some big delivery stocks like Federal Express and the truckers. The railroads and the truckers are signs that the economy is definitely gaining steam. The airlines, if the airlines are continue to improve and airline traffic continues to increase, that's a sign that people are gaining confidence that flying is safe and that they can go through airports and fly and not be any more concerned about getting the coronavirus than if they were going to the grocery store, the post office, or anywhere else that they might be going in the course of their daily lives. So, one other mention here. Let's see, it's 9:33. All right, a couple of more minutes. So this stock Snowflake was an IPO, and we mentioned it yesterday. It had been initially 2 weeks ago. Its price range was thought to be $80 to $90. Then they kind of said, well, maybe it's going to be $80 to $100. Then they priced it at they had a range of official range of maybe 100 to 110. Demand was so strong for it that they priced it at 120. Very unusual for an IPO to be priced above $100 a share. I'm sure that when they started this process, they were thinking, okay, maybe mid to high 80s. So they priced Snowflake Tuesday after the close. High profile IPO. Everyone's been talking about it. Salesforce is an investor in the company. There's a lot of other high profile investors in it. It went up 110% today after its IPO. It was priced at $120 a share. It closed today at over $240 a share, 110% higher than the pricing of its IPO. Look, it's one stock, it's one IPO. I don't think the fact that it had this move means that it was a bubble. I just think it means that this was a very highly anticipated IPO that everybody wants to own a little bit of. They don't care really about the price right now. This is a cloud computing stock. Yeah, shucks, Q3 GDP will not only be decent, it will be a wildly anticipated report. So Snowflake up 110%, a big deal. One other stock to mention, General Electric, formerly a Dow member, really struggling. of late. It rallied 10%, 6.7 to $6.75, up 65 cents today. Um, and also further evidence that the economy is improving, and even probably reinforced by the fact that the Fed said it's really plans on letting inflation stay above 2% for some time before even thinking about raising rates. The yield on the 10-year note, 0.68%. I like the fact that it's going a little bit higher. That means the yield curve is getting a little bit steeper. Financials had a terrible day yesterday. They had a much better day today, up 1.1%. They like a steeper yield curve. And on this sell off that we had, I don't really believe, I could be wrong. I'm going to have to double check it. I don't believe that the yield on the 10-year got back down below 0.6%. So the 10-year yield 0.68%. I think it's actually a little bit higher than that. I think that's positive. I'd love to see it up to 0.75%. That would be 0.75%. We'll see if maybe it takes a shot at getting there over the next week and a half or so. So, I don't have a whole lot else. If anybody else has some questions, comments, I'd certainly get into them. I think that we got to watch the markets tomorrow. We got to watch this weekly jobless claims number, and other than that, you got to watch if how much more profit taking there might be in mega growth uh, tech names. Um, Clearly, you had the deal go. You had the deal with Qualcomm being the buyer, or the not necessarily the buyer, but the U.S. I don't know if you want to call it controller or owner or supervisor of TikTok. It's still a little fuzzy exactly how that relationship's going to play out, and whether or not that's going to pass the litmus test of TikTok's operation in the US not being controlled and totally transparent with the Chinese Communist Party. But we'll see. So, markets today, I think overall constructive, advanced declines positive, gave up very sharp profits in the last 60 to 90 minutes of the day. I think tomorrow and Friday will be very interesting. See if we can follow through the momentum we had from Monday and Tuesday. And I'd like to sincerely thank everyone for their support and for joining us. Excuse me, I couldn't hold that back for another 45 seconds. Once again, this is the Anderson Report. This is my YouTube channel, which is titled The Anderson Report. This also gets broadcast on Periscope. My Periscope channel is TJ Anderson 12. Maddie, thank you very much for being here. And my Twitter handle is TJ Anderson 1. I will definitely have some comments out tomorrow morning, right after 8:30, on the weekly jobless claims numbers, and we'll see if maybe we can get a drop, maybe below the 800,000 level on first-time jobless claims. And if we get, I think the other thing the market's looking for is any clarity we can get or any progress on a potential stimulus 4.0. A couple of comments from both Pelosi and Mark Meadows today that even though it feels like we're miles apart, it wouldn't be that hard to close the gap and make a deal there. But we'll see. Okay, for Wednesday, September 16th, everyone enjoy the rest of your evening, and we'll talk to you tomorrow.